Hello, how are you friends? Welcome to OAM's investment channel. Today we are going to discuss about the opportunities in the power sector. Okay. So why power sector? Though I will be discussing in detail, most of us are worried about the impact of tariffs, impact on exports, how economy will shape up. But there are certain sectors which might be impacted because of the emotional decisions, but the business prospects are still intact, right? One of the such sector is power because we are producing indigenously and consuming indigenously. Whatever happens outside has very little impact on the balance sheet of this sector, correct? So before we dwell little bit more, let's quickly go through the disclaimer. We are SEBI registered research analysts. Whatever we do, currently we help you to understand the basics of these investments. Agenda is to share my experience for a layman investing. I am discussing how and why I have selected certain investment for this portfolio. This is not a recommendation for anyone to buy or sell any stock. You should consult your advisor before taking any action. Proper allocation for risk management in portfolio setup is good idea, and investing in share market is very risky, right? So again, to repeat, no sales and marketing, pure knowledge sharing. So sit back, relax, and try to learn so that you can take your investing decisions. OM is committed in providing a candid investment opinion based on the research, not on gut feelings, not on fear, not on greed. Right? We pride ourselves in a very deep research. Correct? Our agenda is to make investing in stocks simple, safe, and affordable for all, irrespective of your age, education, or pocket size. If you have 5,000 rupees, you should be able to invest. If you have 5 crore, you should be able to invest. That is what our agenda is. That right. So in Indian power sector, if you really look at it, lot of transformations are happening. This transformation is happening from supply and demand point of view. What I mean is that demand is growing. So managing the demand requires innovation, and new supply avenues are being made available. Okay? So those new avenues also need enhancement in managing the businesses. So for example, clean energy initiatives, capacity expansions, digitization and technology is playing a pivotal role in energy production as well as distribution. And to support the role of India as a global economy, lot of policy reforms are also happening, right? I always keep telling that infrastructure is a key sector which Indian government must and is focusing to ensure the all multi-degree growth of this nation. We are one of the fastest growing electric consuming globally, correct? If we compare it with China, we have to understand one thing that China is now already settled economy. Relatively, it is settled economy. Now they are only consumers. Majority of the China has all industries set up and they are consuming the electricity. Their infrastructure is already being laid. But from India point of view, look at it, though demand is growing, still we are running behind the infrastructure. So the focus on infrastructure development to meet the future demand, there is a lot of scope for the growth. I am talking about multi-bagger growth. Hmm? This sector offers a strong long-term investment potential because a lot of renewable energy related sources are in India, which creates a scope for modernization, and of course everything will require energy storage. But why power on priority? Because the things that I explained in the first opening statement, because it is a indigenously consumed and created, produced goods that will be taken care of. So that is the important sector. Now, if you look at the historical overview of installed capacity growth, correct, in 2015, we had 272 gigawatts. By 2020, after 5 years, the growth was 6.4 CAGR. By 2024, because of COVID and other things, the growth slowed down to 3.5%, correct? Which means the growth in next 5 years it will be more accelerated, and it will have to. Lot of global shifts are happening politically and economically both. Historically, our generation mix till 2024 has been higher dependency on coal, gas, and diesel. Renewable energy has picked up a little bit, so solar, wind, hydro, and biomass it has 42% share, and nuclear was only 2%. Correct. So India is witnessing a consistent decline in the share of coal and rapid increase in renewable capacity. Resource availability is the concern from the diesel and coal, and also there is a pressure from reducing the carbon footprint. Correct. So all those two factors are creating more focus on renewable and modern sources of energy than the traditional ones. Correct. So we are seeing lot of solar focus on the solar energy generation and distribution, and also we are seeing now shift happening in nuclear energy also. Correct. So what are the projections for power sector growth? So from installed capacity point of view, by 2030, we are supposed to reach 650 gigawatts target, which is going to be roughly 7 to 8% CAGR from the capacity growth point of view in 5 years. Renewable energy capacity is 178. We are targeting 500. That is almost 20% CAGR. Power demand is supposed to rise by annually around 6 to 7% in next 5 years. And transmission invested because generation will require transmission. Correct. So generation can happen for 5 or 6 different sources, but transmission of energy is going to be on the same channel. Correct. So transmission has a more robust and sustainable growth from its consumption point of view. Right. That goes as a hint also where I will focus more for my risk-free investments. Correct. Some growth key growth drivers that I am targeting is first of all is the policy push from the central government, right? Whether it is the energy transmission mission of 2070 with net zero carbon footprint, PLI production link incentives for solar modules and battery storage, urbanization and EV. We everybody know now the EV push has even intensified. In last 6 or 8 months, you see that EV push has been even higher intensified. Decentralized energy, right? Now the generation of electricity is moved from big power plants to a small rooftop of small flats, houses, or even the huts. Not only that, all the dams, some agricultural fields, all those things are now used as a energy production plants. Correct? That can be as small as 50 square feet, or it can be as large as 5,000 acres. Right? So avenues for using real estate for generation of power plant, instead of using, I will call it reusing. Those has increased exponentially. And all these things will require lot of management, lot of execution management, lot of distribution management. And for that, there is a lot of digital transformation that is happening. Something like smart grids, AI-based load balancing, IoT, Internet on Things based monitoring, and there are a lot of detailed, more micro level modernizations that are happening. We are trying as a India as a country, we are trying to match what is happening in Western advanced countries, right? So we see a good scope in these four different pillars of power sector, I will call it. So once this sector, if you understand the play, the criticality, the critical role of power sector in global as well as Indian uh, economy, you will understand what are the different innovative emerging business models that are coming out of it. So green hydrogen production, then battery energy storage systems, right? Green energy hydrogen as an industrial fuel, it sounds very simple, but look at the infrastructure required for it. Look at the specialization that will be required for it. Correct? Those are a huge long-term opportunity. See, infrastructure is not something like some small technology that is happening with 6 months of research and having 3 4 years of consumption life. Power sector or any infrastructure takes 4 to 5 years to develop, and it is built for 20 40 years. NHI, for example, or IRB company, which took a lot of years to develop roads which are getting monetized now in the way of tolls and other things. So similarly, power sector infrastructure is going to get built across the time, and the monetization will start happening little later. Right? So it is a true long-term wealth generation opportunity. If you look it from that perspective, it is not for a quick buck. Hmm? You will get multi-bagger returns, but that will take time to season out. It will take a mature shape when things get really working on the ground. There's smart grids and digital utilities, right? If you have visited US or Europe, you will see your energy consumption and all those monitoring happens on the phone. We are yet to reach there, and it will happen. The more and more power, private sector players come into this sector, you will see more and more competition and more digitization will happening in this. Hmm? Something like NL in Italy and PG&E in US, lot of cloud-based, IoT-based energy monitoring systems are already in place. So that is another good sector, right, which can be looked upon. Floating solar plants, I just mentioned lot of water surface, sand surfaces, rooftops, lot of things are being used. Real estate is being reused for generating power. Correct. So floating power NTPC has just, I think, started, not even concluded, but they have 100 megawatt plant based on the water surface. So why invest in power sector? First is the diversification. Sector spans generation, transmission, storage, distribution, and I will add IT and technology, cloud data storage also with it. Those are going to be proxy beneficiaries are of innovation and expansion in power sector. Government policy backing, correct? Then stable cash flows. As I mentioned, infrastructure is not something that this power sector is not something that it will have varying consumption. एक बार factory डल गई, once you set up a factory, it will need a power. Nobody start factory on a weekends or keep it off for 3 months and then come back after vacation, right? It is a sustainable consumption. Sustainable consumption will have sustainable output, correct? Then ESG scores to attract global institution, clean energy, zero carbon footprint, all those things will also require expenditures. Correct? There are a lot of company who helps in auditing, optimizing this all green energy related aspect. And of course, there is always an export potential when you are talking about a mass production happening in a country with a diverse geography as India. Right? So we are looking at green energy, hydrogen export, solar module export, then partnership with some global companies, their technology, our resources, maybe technical resources or human resources. Those things will create a lot of opportunity for sustainable and growing supply and demand both. But of course, any investment, before looking at the growth and the returns, we must first look at the risk. And that is what OM style is. We focus on managing risk because we believe if you manage the risk, investment is going to give you the returns, right? So, couple of risks is regulatory delays, correct? It will happen if there is a change in government, things might go up and down. For that, we need to have a company which has very strong compliance history. So, if some regulation changes, quality related aspects or environmental related aspect, that company should have a good backing of managing the compliances. Then fuel supply uncertainty. If we are looking at a coal and diesel based kind of sector, we need to worry about that power related coming out of that, right? We can focus on renewable energy then. That is a good mitigation strategy. Infrastructure, whether it is a power or road or defense or airways, require a lot of capacity, economic capacity. So we will have to look at the companies which either have a good healthy balance sheet or their business model is such that lenders will not pull hands while lending them the money for the business. Correct? Tariff unpredictability. Look for long-term agreements. Generally 10 years, 15 years, 20 years. The more longer the agreements, inter-country or intra-country, the more sustainability of the business will be there. So in nutshell, I think Indian power sector is at an inflection point. from being coal heavy and inefficient to transforming into decentralized, green, and technology led ecosystem. For long term investors like me, I am confident that exposure to this infrastructure, clean technology, and IT related things, with, including digitization, can be achieved from only one sector. I'm not saying you focus entirely on this, but investing in the multiple sections of the power sector, we can have a very good diversification and risk management. So I'm loving it. Right? That is the reason I am analyzing this sector in more details. We have identified one portfolio which is focused on various sectors inside the power sector with heavy, good, healthy balance sheets. Right? So it is a good opportunity for really a long-term investors if you are investing in generating sustainable income, creating wealth. Correct? In general, our OM's risk management is based on five factors: diversification of the business that I already mentioned, diversification of the sectors. So even if I am hungry about power sector right now, I'm not going to deploy entire money in power sector. Right? Inside the power sector, there is a diversification, but I will deploy my money across various sectors. I try to invest with a high margin of safety. Right? There are different parameters we deploy to identify margin of safety in our stocks. We try to stick with the leaders, correct? And by nature, stock market is risky. And by risky, we means volatile. Good businesses don't close overnight, correct? Their balance sheet might take a hit because of internal or external factors, but because of these varying factors, share prices goes up and down. So if you want to generate wealth for 10, 15, 20, 50 years, what is the rush to deploy entire money in the one go? Let's use volatility in our benefit and try to deploy money in a staggered manner. If you want to earn money for 10, 15 years, at least deploy it across 1 year. Sometimes you might purchase at higher prices, sometimes at lower prices, sometimes at very low prices. Just like we got a good chance 3, 4 months back. All this thing normalizes your purchase power, the cost of acquisition, your average price goes down, automatically your margin of safety increases. Right? We are neither in a rush to enter, neither in a rush to exit. We don't play prey to the volatility. We use volatility and quality to our benefit. As simple as that. Right? So we try to help you take right decisions. We guide you to avoid impulsive decisions. As I mentioned, emotions have no role in investing. If you are emotional, stay away from the stock market. The only thing you can do is focus on quality and stagger your investment. Let market play its own role. Don't deploy any critical money in the stock market. Okay? We are a deep research firm. We take time to research. Our research is based on information and facts, not on the gut feeling. Correct? If you want to invest with us, you will get a proper detailed investment report before you take a decision. It is not, we don't provide tips. Right? So that's what WORM stands for. We have a WhatsApp group where you can join as a learner. It is not a paid service, it's a free forum for all investment enthusiasts where you can join, you can post your views, you can discuss, we can have a lot of discussions on that. All right. So thank you very much. This is our YouTube channel, OM Investments. If you guys like this video and you want more videos like this to come, please don't forget to subscribe. Please have one like on this so that I get motivated. Looking forward to see you all again very soon. Thank you, Waits.